Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 23, 2023. Hope you're all doing well. In today's segment, we'll take a look at how to make millions worry-free trading big ETFs and big index options. So with that, let's jump in and get started. One of the reasons I love trading index options is because they're tax friendly. When I say tax friendly, it means there is a 60% long-term tax and 40% short-term tax. That's a great vehicle to consistently make money and don't worry about paying too much taxes. So that's why it's one of my favorite strategy. I've been following it very nicely over the period of time, and it's one of my go-to strategy to consistently make money. Look, we all want to profit consistently. My recommendation is to really create maybe 2 or 3 accounts. One account for you to do speculation. You can do all your speculation, buying short squeezes, buying some not well-known stock that can go higher. Maybe it's a biotech startup, and so on and so forth. That's the speculative portion of your investment. Maybe have some 20% or so in the speculative investment portfolio. The other portfolio that you should probably have is your bedrock, which is to really consistently make money. My recommendation is to go with the index option that we'll talk about today. You could also go with the ETF if it's a tax deferred account like IRA or 401k. And other portion is really for the long-term investing. You could buy and hold. That could be your good, maybe say 30 to 40% of your portfolio. Just keep putting money and sock it away for your long term. This could be your 529 plan for your kids education. It could be your 401k and so on and so forth. Just buy and hold some great stocks. Don't go into fad of buying some new stocks in that portfolio. Go with some bedrock stocks, like Microsoft, Nvidia, and Apple, and so on and so forth. Consistently growing companies, and you should have some great ETFs like SPY, QQQ, and SMH, and so on and so forth, and keep them, just keep investing in it and go from there. So in today's segment, I want to focus on how to make your millions trading this these index options. You could also do similar things by trading the ETF options. So with that, let's jump in and get started. Look, let's go into futures here in Finviz platform, which is one of my favorite platform, and you could go into indices right here and look what's going on. You should always have a broader picture when you're investing. Look what's going on here. We got Dow Jones Industrial Average. Look, we got a nice ceiling right here, and there is a nice bottom right here. And same story, S&P 500, nice resistance level, nice support level. And you see the same pattern in NASDAQ. Look, nice resistance level, nice support level, as you can see here. Russell is slightly weaker. Look, it's got a little bit lower resistance level right now and a lower support level. And you got, let's not worry about Nikkei for now. Let's look at, these indices, which are primarily, go-to indices, for the bedrock, make your millions type strategy. The moment you see this type of pattern here, you could understand, hey, you know what, this is a good market to really sell options. So typically my strategy is very simple for these ETFs and indexes. You could sell some credit spread at the top here and make some money when the ETF is going higher, showing some resistance and pressure, as you can see here. And when it comes down, you could sell some put spread underneath and make some money. So that's why Effectively you're constructing an iron condor, but you're not doing it blindly. Instead, you're constructing it in a thought process here with a careful thinking, meaning you're selling the call spread at the top when it's going higher and showing some deterioration, and selling put spread when it's going lower and showing some strength that it can go higher. And you don't need to, if you are a little bit not too much into the market all the time, don't worry. You could also do iron condor with a little bit wider spread and wider body. We'll talk about that too. And look, this is a daily chart. This platform gives you ability to look at the weekly chart also. You could just click on W here. It gives a weekly chart. Look, in the weekly chart, it's more obvious. Look what's going on here. Broader picture, look nice. Trading pattern here. I think this will continue for a while, mainly because Fed is not our friend, and they might increase by 24 basis points as you go forward, and keep it at that. So that will keep a lid on the top side and bottom side. Same story. Look at Nasdaq, same story here. And look at Russell. Nice trading pattern. The moment you see this here, you get the good picture here. Russell, you could even now you could sell some credit spread at the bottom here, make some money as it goes higher. You could sell some call credit spread here. So that's how you'll do it to consistently make some money here. Look, Russell of VIX of late is showing some strength, as you can see here. It may be obvious if I go to daily chart here. So as I go into daily chart, look, Russell is showing some strength here. The moment you see, VIX is showing some strength. The moment you see VIX jumping up slightly like this, that tells you, hey, you know what? This could be a good time to sell some put spread underneath, mainly because the volatility is ramping up. That's a good time to sell some, put credit spread underneath and make some money. All right, so without further ado, let's go into a little more details and go from there. Look, its strategy is very simple. And if I go to my platform here, which is FinViz, by the way, if you have elite platform, which I will leave a link, you could really look at some of my favorite ETFs and see how to profit from it. Look, I will go into a screener here, as you can see here, and I already have a screener right here called Big ETF. I'll go into my Big ETF screener, and I go into my custom view. If you have FinViz Elite, you can create your own custom view by going to settings and selecting what columns that you want to see here. I got few things here that I selected. This is what I want to see here, so I could put it away here. And look, we got simple just 18 ETFs here. I don't trade them all, I just trade the top ones. So you could sort this easily by clicking on volume here, and look, we got top volume here, SPY. You could do SPY. My favorite thing is SPX, which is the index ETF. Then you got QQQ here. Look, QQQ is a great one. It's a Nasdaq 100. And then I typically trade, some Russell 2000, which is IWM. Right here, number 6, IWM, great vehicle here. And then sometimes I trade this SMH because semiconductors is in a limelight here with the Chat GPT, Nvidia. That's a great one to trade this strategy also. It's very simple. We got just 2, 3, just 4 underlying here, and if you're doing the index options, it's just 3 underlying. And I would also sometimes do this DIA here. DIA, as you can see here, volume is slightly lower. It's just 30 stocks, as you know, but I do this also. Mainly the index ETFs, I do SPX, NDX, and RUT or RUT, and we got DJX here. These are my go-to strategy where I trade my credit spreads and iron condors day in and day out, worry free. Don't need to worry about what's going on to a particular stock. I don't need to worry about any earnings announcement and things might tank. No mergers, no acquisitions, don't worry about it. It's a very simple strategy. I trade quite a lot of spreads in these to consistently make money and make millions and go from there. So with that, let's jump in and get started. Look, what we'll do today is we'll go into one of my favorite platform here, which is really let's see here, um, which is which is optionstrat.com. As you can see here, we got optionstrat right here, and you could go with the free version or a paid version. I'm going with the paid version. If you are serious about options and trading options, it's a very good platform here. I will leave a link for you. It's not too much money, around $115 or so for a year. It's really not breaking your bank at all. I recommend it, but if you don't want to put your money right away into this subscription, go with the free version. This is totally free, and you could try it out, and when you like it, you could go into the premium version, which is hardly not too much money at all. So with that, let's jump in here and go into build, and we could go into credit spread here. So look, you could go with the multiple things here. Bull put spread is a good one, and we got bear call spread also. We'll start with the bull put spread here, mainly because if I go into my Thinkorswim platform here, which is a great platform if folks have not looked at it. And look, we got charts here, and what I've done is I got here NDX and basically both are NDX. And what we could do is really we looked at all the as you can see here, right? We looked at all the ETFs here, and we made an observation. Let me take you to that here. We made an observation here by looking at this. Look, RTY or Russell 2000 is a great one. It's really it has not done much here. This could be a good one to really sell some put spread underneath at this time, so we could implement such strategy for this one here. Let's go back here and go into Russell 2000 here. I will go build here, and I will say bull put spread. And from a bull put spread perspective, look, typically I would go 45 days out, or so, or even a little higher. So let's say RUT here, which is Russell 2000 index. I will just repeat once again for all of you. The reason I go with the index options like RUT versus ETF, which is IWM, is mainly because it's so tax friendly. There's a 60% long-term capital gain tax and a 40% short-term capital gain tax on all the index ETFs. That's the reason I trade RUT, NDX, SPX day in and day out to take advantage of this long-term capital gain tax of 60% and short-term capital gain rate of 40%. That's a great vehicle. That's why it pays up. If you make a good chunk of money here, you don't need to pay too much money to Uncle Sam with this friendly tax strategy of these index options. All right, so with that, look, we got here RUT here, and look, what we can do at this time is really we can go into Thinkorswim platform here, and let me make this smaller, and I would go into trade tab here. Before I go into trade tab here, I could go here and I could make this a little bigger here. So let's do one thing. Let me take this out. All right. So what we'll do is we'll let's see, we'll get rid of this mode by clicking this right here. All right, let's go into go and make this a little bit bigger here. All right, so let's go here. Oh man, okay, looks like it's done. Let's do one thing. Let's go into the chart mode here. Instead of two charts here, let's go into one chart here. That will make our life a little bit easier. Look, we got NDX here. We don't want NDX. We want RUT at this time. So we got RUT right here. By looking at the chart here, look, we got resistance level at the top here on a daily chart, and we got look, we got the support level right here. Nice support level right here. So your objective with this is really to trade some put spread here. You want to sell some put spread somewhere down here, so that way it's not too much risky. We look at the delta. I will show you in a while. And go from there. So with that, let's go into Thinkorswim platform here and bring up RUT. Look, we got RUT right here. And look, right now we got multiple expiration dates, as you can see here. And typically with these index options, I would really go into a little bit higher expiration dates. Maybe around 60 days, 50 to 60 days is good enough for me. I typically try to look out 40 to 60 days or even 65 sometimes, because typically these indexes are really, really stable, compared to a stock like a Netflix or, Meta, which can rally and, come down drastically, or even compared to Tesla, which can come down 10 points. So these are a little more stable, call it boring type ETFs. That's where is our sweet spot to make some great money. So look, we got here ETF. I love 40 to 60 days or even 40 to 70 days at times. I'm not here to really speculate and make some quick money. Instead, I want to really make some great money consistently and outsmart or beat those benchmarks like SPY or S&P 500. Look, as you go down here, we got call on right here on the left hand side here, and we got put on the right hand side. So because we are doing the bulls put spread here, keep a watch on the right hand side here. Keep a watch on delta. We want to go around delta 10 or delta 15 here. Keep watching here. We keep going up here. So look, delta here 11, 12, 13, 14, 15. So I would say, stay around, say, 14 or 15 here. Don't try to take too much risk. It's not worth your while. So look, 1620, and look, there is a nice open interest around 676. So 1620 is good enough for us. So we could go into the chart right here. Look at 1620. Look right here, 1620. We got 1660, 1620, even right down somewhere here. Look, no need to worry. So look, there's a nice support around this level here. So we are selling around 1620 or so. Now, if you're a little more risk averse, you could go a little higher also. Let's go back here and go into trade tab here. That's 1620. Right here, 1620 here, and you could also go a little higher. Look, there is a nice open interest here. Look, 1650 at 6280. We could go into our chart here. We could go to, let's see, 1650 here. We could look at 1650. Look, 1650 is right. Let's see, 1660 right here. This could work here. 1650 works as a nice support level here. Even though they came down to that level, they bounced back in a while. So around 1650, 1640 is a good level here. So with that, let's go in here to my favorite platform, which is optionstrat. So look, we can do here. We are anyway, let's go in here and go to June 16th, which is 54 days out, as you can see here. And what we can do is we could we already have a put spread here. Let me do one thing. Let's start from scratch. Let me remove this, so that way you can see what's going on here. Remove. So we want to sell a bull put spread here. You could go into build and say bull put spread. Done. So look, we got a bull put spread here, and we are selling the short short put around 1650 or so, right here. Look, that's a good level, 1650 here, and you want to really buy a put, so to protect yourself. So when you want to buy a put, typically, folks always ask me this question: should I go for $5 wide? Should I go for $10 wide? Should I go for $20 wide? My recommendation is really depending on your account size. Make the determination. For example, if you have a, say, $25,000 account, go with a $10 wide spread, so that way you don't worry too much. Look, if we take that assumption here, I would go into 1640, 1650. So if you do this, look, you're getting a $125 credit, as you can see here. That's a good credit here. And your estimated margin is $1,000. That's your max risk. It's $1,000 because 1650 minus 1640, that's a 10, and 10 times 100, which is, it controls 100 shares. It's 1,000. That's why estimated margin is 1,000. Your max loss is 875 because total amount is 1,000. That's the difference between these two spreads, and minus the credit that you received, which is 125. That makes your max loss as 875. And max profit is same as the money that you received here, which is a net credit. Look at this here. This is very, very, very important. Your chance of profit is 86%. So this is really great. Many times, folks always, go into the mode of, let me make more and more and more profit at the extent, I don't want to put too much money in the risk. But in the trading business, it doesn't work that way. To consistently make money, you have to put some money at risk. So look, that's why I'm not too much worried about putting money at risk when my chance of profit is high. So if you put low collateral, then your chance of making profit will become lower. That's one of the reason I love this bull put strategy here, because look, even though you put out $875 max loss or at risk money, there is a chance of making profit 86%, and net credit is pretty good here, which is 125. So that's why I love this strategy. As long as as long as the stock this index is above 1648, you make money. So it's a great strategy here. I would recommend this strategy for the folks who want to really sleep at night, don't worry too much, and make some money here. And look, we could make this a little bit range small here for you to look here. Look, as I make this here, you can see this a little bit better here. So this tells you your break-even point is right here, as you can see here. And chance of making profit is less. You're right, as you can see here. As long as stock stays about this level, or this ETF or index stays about this level, you make money, which is a very, very, very high strategy game here. So I do this consistently. I will show that in a minute. And look, if I go back to the chart here, look, by looking at this chart, you can see here, this is really in between right now. It keeps, going up and down. So you could even leg into, when it goes slightly lower. Typically, I start with a bull credit spread right here, and I might, add on a bear call spread later. So that way, I make money both ways. Bulls and bears can struggle. Look, if you do something like this here, I would right now I'm opening a position for put spread here, bull put spread somewhere here 1650, as you have seen here, somewhere here. So you could, I'm selling it somewhere here 1650 and buying at 1660, something along these lines here. And when it's going higher, I would really sell something right here. I would sell a call spread here. So effectively, what you're doing is really between now and June 16th, you want this ETF to really go zigzag. up, down, up, down, up, down. Finally it will settle down in between. You get to keep your entire money, and that's the strategy here, which is a very, very, very winning strategy. Folks get confused with all the fancy option strategies, but if you keep consistent with a strategy like this, you will make your millions very easily. All right, now folks ask me all the time, hey, you know what, my account size is a little bit higher, so can I increase my spread? Of course, if your account size is around 50K or so, I recommend you go at least a $20 wide spread. Instead of selling two spreads $10 wide, I recommend you do one spread which is say $20 wide. So for example, here 4050 we sold. This is a short put, and when you're buying it, if you buy so close here, then you have to pay more money for the option that you're buying. Instead, if you go one spread out here, so look, now we got $20 wide spread here. Now look what's going on here. The net credit here is 250K, and your chance of profit is still high, which is 86%, which is great. So I would if your account size is more, I would go with this here. And normally, since my account size is slightly high, I even go at $20 wide spread, or even I would even go at $25 to $30 wide spread. As you go further and make your spread bigger here, look, now it's $30 wide spread. You get more money in, and you'll also put out more money. Your max loss increases, and I would recommend stay with the 20 or 10 or 20. But if you have a portfolio margin, you could go a little bit higher, like I'm doing here, $30 wide spread here, so that way you can consistently make money and keep the chance of profit still high, which is great. So as you can see here, the way to think about this is really, you are selling a short put here, and as you increase the spread width here, you're going from 1620 to 1610 and keep going to the left here. That gives you a feel of a naked put, but you don't have unlimited loss potential. That's how to think about it here. You could do $5 wide spread. If you do $5 wide spread, as you can see here, you just bring in a little bit low money here. Let's see, it's very small. You get small money. As you go wider spread here, you make more money. So it's really, instead of selling more spreads, my recommendation is really increase the width of the spread here, so that way the put you're buying here, you're not shelling out too much money. Instead, it will be further down from current price, and you pay less money for the put that you're buying. That's a great way, instead of putting on more and more spreads. All right, so by looking at this here, right, I mean, my assumption, many times, I really put on iron condor right away, because I know this is zigzag. In this scenario, I would just put on an iron condor here. To do that very easy, I would really go here into my trade tab here, and look at a call spread at the top here. Look, from a call perspective, as you go here, look, we got 11, 12, 15, and look, we got strike price 1930, and look, 1930, it's 15 delta. And if I go back to 1930, let's go here to trade tab here to the chart. 1930, look, 1930 is somewhere right here, 1930. So you could sell a call spread somewhere right here, or if you're risk averse, you could even go slightly higher and basically make money from the zigzag mode of this IWM. So let's go back here and let's look at 1930 here. I could just slide this here. 1930 is somewhere here. I could click right here. And I could add a position here. I can, I can really, here we are doing buying a call here. I could buy a call at 1930, and I could go to 1940 here, or even 19. It's a $30 $20 widespread here. 1950, I could go here, right click, and I could sell a call. So that's again a basically a call spread here. So it's a $10 $20 widespread here. Look, right now, let's go back here. We are actually 1930 we are selling, and 1950 we are buying. So look, right now what's going on is, look, because of this we are our max credit, as you can see here. Our max credit, as you can see here, is $510, and that's a good way of making money here. And your max profit is max loss is 1490. One of the great thing about platforms, many platforms is really, because your spread width in this case is 20 on both sides, and given a stock cannot go both ways at the same time, most of these platforms will have you the margin just for one side of the spread, because stock cannot go both ways. That's why your max loss and your margin requirement in this scenario is really the length of the spread, which is $20, which is $2,000, minus the credit that you received, which is 510. It's very efficient when it comes to usage of capital. That's why I recommend Iron Condor when the ETF is really not doing great and it's in the middle range. So as you can see here, if I go to my my market watch tab here, look, we got IWM right here. Look, IWM from an RSI perspective, look, RSI is 50. That's the relative strength index. That tells you stock is in between. It's a neutral. It goes up and down. Whenever RSI is around 50, strategies like Iron Condor that we are talking about right now works great, because it can go slightly higher, slightly lower, come back to 50. It's a kind of a reversion to mean type methodology here. And on the ETFs, many times I would not pay too much attention to IV percentile or IV rank. Look, IV rank is 35.63. For a ETF, it's good enough. You could go with this strategy. All right, this is a great strategy, and I do this all the time. One of my favorite thing is both NDX, which is Nasdaq 100. You could do same strategy here also here, and you could do same strategy on SPX. Let's do NDX for a moment here. NDX, you can look at QQQ to get some Q here. Look, IV percentile or IV rank is 26 here, and SPY is 40. SPY is probably better off here because IV rank is slightly higher. We could do it for SPX here instead of NDX. Same strategy here. SPX, look, RSI is 59, so which is still okay for Iron Condor. Or I would say start with the bull credit spread. If I go into my chart here, if I say SPY, look, SPY is already at the top here. So actually, let me take that back. You could sell a bear call credit spread at the top here. So at this time, you could sell a bear call spread here, and when it comes down slightly, it will always come all the time. You could sell some bull put credit spread down here a little bit later when it comes down here. That's how we'll start constructing. Start with the in this case, because it's really coming down, hitting some resistance here. Start with the bear call spread, make some money here. As it makes its way down, sell some bull put spread and construct an Iron Condor over the period of time, because you're starting with one spread, you're adding other spread. When you add other spread, it will basically make it an Iron Condor. And from a capital efficiency perspective, because it's Iron Condor, you're only paying the collateral or margin requirement for one spread, for not for both spreads. All right, that's the SPY here. And if we go back to SPY, we could say SPX. Let's go back here. All products. All right, SPX. All right, if you look at SPX here, I would do same thing. Don't close, don't go too close. Go to around 53, 45 to 60-day expiration. Works very well. Look what's going on here. You could go down here on the call side. You could look at delta, say 15 or so here. Look, we got delta 15. Keep going down here. All right, so look, delta 15 is somewhere further down. Look, I've been doing it all the time. So delta 15, as you can see here, somewhere right here. Look, we got right here. I'm even more conservative, as you can see. I put on this a while ago here, but I would go around, say, delta 13, which is good enough for me. 43.75, as you can see here. And you could do $20 wide, 43.75, and let's do one thing. So 43.75. You could do $25 wide spread here, 43.75 and 4,400. So let's go back here to this platform, and let's say let's remove all these things here, so we don't need to get worried about all these old ones here. Let me remove this. All right, so we are doing a bear call credit spread here. So credit spread, bear call spread here. We could just go here and look. So if I go back to my thinkorswim platform here, we are looking at around 13, which is 43.75. So it's 43.75. Look good. Open interest checks out here, 43.75. So let me go back here, and this is 43.75. all the way right here, 43.75, right here, 43.75. And let me just pull it slightly here, and we want to sell a call, buy a call at 43.75. Actually sell a call at 43.75. that's our short leg, and we want to buy at 4,400. so $25 wide spread here. You're bringing in $330, as you can see here. Look at the chance of profit, 83% chance of profit. Great, I love it. And look at the max loss here, which is the width of the spread, which is $25 or $2,500 minus $330, which is the money that you received. That makes it 2170. That's your max loss or your margin requirement if you don't have a portfolio margin. And you could just look at this a little better by moving this little around here. Look, you'll see much better as long as this SPY stays below this break-even point here, which is 43.78. If I go back to the chart here, 43.78 is look, it's much higher. It's even higher than this. Right now we are looking at 43.25, and we are looking at even higher than this, which is 43.75. That's our short call. There's a very high degree of profitability here. That's why I love this here. And as SPX comes down, which it will always do, there is always some comment from Powell around increasing the rates. Promptly this will come down here. At the time, I would say sell a put spread here down here and make that iron condor without providing any more margin capital. That's the way to go here. Consistently make some money here. Look, stock market is always, there is always some nice shiny object here, but I recommend to consistently make money, stick with SPX, IWM, SPX, RUT, NDX. Do it day in and day out. You'll make consistent money. Keep the noise out and do it. And if you have a little bit smaller account, or if you don't want to do SPX, go with SPY, QQQ, and IWM, and you could do even SMH. My preference is for you to look at index options like SPX, NDX, and RUT, mainly because from a tax perspective, it's a great vehicle. You just pay long-term capital tax of 60% and short-term capital tax of 40%. Great tax-friendly vehicle. So with that, I will go into my account here for you to quickly take a peek. and we'll go into a little more detail. Look, this is one of my smaller account here, and in this smaller account, look, I've been consistently trading SPX. Look, we got here multiple iron condors that I constructed over the time. We got one condor here, iron condor, and that's a PL, profit and loss, about $10 profit. And we got one more iron condor. Both are 53 days out, as you can see here. And look, then we got Tesla. This is my earnings iron condor, as you can see here. Look, that's also profitability $28. And we got one more here, NDX. I love NDX, by the way. I got two iron condors here. And look, NDX also, we kind of made around, say, $161 profit already. And main thing I always look at is my theta. This is one of my smaller account. This is about $25 wide amount here, $25,000 account. So look, in these iron condors, just a handful of them are making $26 profit every day. That's the theta. And then I got some vertical that I'm constructing. In these verticals, again, we got SPX, Amazon.com, SPY, and look, we are making consistently around $36 per day here. Total, between these two, it's around 36, maybe say 40 plus 20, around 60 or 55, $60 on a daily basis. And I got more money to deploy as the market, as the VIX ramps up. One more thing you should always look at is the VIX here. If I say VIX or VX here, look, as VIX ramps up, look, VIX started ramping up here. This is when your spreads, look, it's been, VIX has been dropping like a dead rock here, but off late VIX is going higher. The moment VIX jumps higher like this, you can slowly ramping up on your spreading strategies and sell some spread and sell some spread. Because VIX is ramping up, you'll get more premium for selling the spreads. All right, so this is about my smaller account, as you can see here. Great way, some of these Amazon, once, as you see here, I don't trade the risky stocks, and I don't trade stocks like, say, ChargePoint, or stocks like, say, GameStop. In this account, it's mainly the spreading strategy. I keep it consistent to that, so that's why I might do some earning play like, say, Amazon and Tesla, but for most part, it's for my index like SPX and NDX, and I might do some SPY, and IWM and QQQ, but mainly I will be transitioning this mainly to completely index ETF, and I would be adding more. Right now, this account has got around 25K, but by the end of the year, I want to make it 125K, and then I can go into the portfolio margin. That's my smaller account. And now I want to take you to my little bit bigger account. As I told you, I maintain multiple accounts. This is my little bit bigger account here. This is around 250K or so account. And in this account, as you can see here, I got some of these earnings play like ADP, which is a payroll company. Again, look, iron condor, and look, it's again 616, which about 54 days out. And look, there is a nice profitability for this iron condor here, 47% profit. And we got AMD here. AMD is a stock, don't worry too much. AMD, I think it's making some profit. That's good. Look, Amazon.com, we got 12 positions here. I think most of them are iron condors with some credit spreads. And last expiration cycle, which is just yesterday, bunch of these, these iron condors got rolled off, completely expired. But some of them I closed the positions. Amazon, I got 12 positions here. Look, profitability perspective, it's a 139, as you can see here, and nice 23% profit. As the day reaches, look, I'm doing a laddering here. I got 519, as you can see here. Some of these are 519. They will drop off pretty, soon in 20-30 days. And then I'm ramping up or scaling up on this 616, as you can see here. So look, from Amazon, from a 12 options perspective, nice 139. So let's say PL is 73. It will ramp up as the day approaches, because as many of you know, it's a theta decay increases as the date approaches, expiration date approaches. That's about Amazon. But without further ado, I'll take you to my index options. Look, we got multiple. Look, we got NDX, which is my one of the go-to index option here. Look, I got 16 spreads here. With the NDX, it's a minimum $25 spread, and I'm doing iron condor. In many of these cases, I constructed this iron condor over the period of time. Look, there's a nice $720 profit here, and look, most of these are for 6/16, which is June 16th, as you can see here. And I closed a bunch of them. Got closed out yesterday, which is 4/21 expiration. So look, this is a great one here, and as you scan through here, we got we got same thing. We got QQQ and RUT, which is which is Russell 2000 index. Look, this has got about a nice 357 profit right now, which is great. And this one, as you can see, are all 6/16 here. And as the day approaches, this profitability increases. PL percent here, profit and loss percent, is 0.15%. That will increase as long as RUT goes sideways with a nice big margin. All right, then finally, let's look at SPX here. Look, we got SPX. Look, I got 25 spreads in SPX. Most of them are iron condors, and we got some of these credit spreads, which I'll construct them into iron condors soon as we go forward. Look, from here, look, we got total 799 profitability here, and right now it's 0.22. As you can see, you're laddering. I love laddering here. 519 within the 30 days or so, this will go away, and then we got scaling up to the following expiration, which is say 50 to 53 days out here. Look, that's a lot of them here, and that will also roll off, and you could make money as the day passes by. So that's, we got more. As you can see here, we got SPY. I will not go through SPY. My objective is really to go big on this index options to get the tax advantage, and stop, basically scale down on SPY and QQQ, go more into SPX and NDX and RUT. All right, so if you look at the big picture here, in this 250K account here, right now, as you can see here, we got a total profit of around, say, $22,000. I kind of take some money out every month in this account, so that way I don't get overly greedy deploying all the cash. And most important thing I want to share with you is, look at this theta decay here. Every day, $284 is the theta decay. That's basically you are making around 284. Before expiration of 421, it was around 350 or so. So easily, really, you could think of like a passive type income. You slap on some credit spreads, and you keep making money on a day in, day out. In this case, for a 250K account, you're making around, say, close to $300,000, without taking too much. $300 per day without taking too much risk here. That's the way to go here. I could scale this up slightly. I'm not using all my buying power. I wait for market to really either go up too much or go down too much. That's when I deploy more buying power. Right now, I'm not using all my buying power. So this is a quick recap. If you have not done these credit spreads already, I recommend you do it, and don't go after these nice shiny objects. Instead, start with the SPX, NDX, and RUT. Or you could even do other ETFs like SPY, QQQ, and IWM. But my preference is these index options, because there is a great tax benefit. So with that, thank you very much. Happy investing and trading. Please subscribe.